Okay, g'day everybody and welcome. Hope everyone is well. Good morning, good afternoon, good evening, wherever you may be. We'll just do a quick sound check. Okay, g'day. All right, sounds like I'm coming through. I'll just get a loud and clear there if I can, thanks, from everybody, from a couple of people. Okay, very good. G'day Jean, Interim, VJ, Choc D, Andrew, Harty, Bluefin, and Farah, I might just call you, MM4X, Hansi, PPN, PP Nair 74. So, g'day English Teeth. All right, everybody. Hope everyone's well, and hope your trading is going okay this week. Been a bit very stally, probably the longest, not the longest stretch, but probably one of the longest stretches for a little while. We seem to get a little bit of movement, and then we get a 2 or 3 days of nothing, then a day or half a day of a bit of a movement. So, now is the time to sort of keep your powder dry. But anyway, enough about that. So tonight we've got the Traders Workshop again. So, g'day Cheyenne, the Ray Therigan. Thank you, Interim. So, now if you're interested too, go and have a look back through the streams. I did one this morning, did a little bit of basic Elliott Wave information and a few other things, some basing structures, whatnot. So, all right, let's jump in, folks. So welcome if you're new as well. So welcome to Wednesday workshop. So the overview of topics for today's workshop is Pro Trading Tips number 2. So the very first tip is tip 1 is lower the trade size when trading poorly. G'day there, Nick. So some possible reasons for trading poorly. Let's just pull this apart a little bit. So tip number 1, lower the trade size when trading poorly. So why would we do this? Possibly out of sync with the market, not following our trading plan. Well, that's a fairly glaringly obvious one. Personal issues affecting our objectivity and our focus. Making fear-based decisions. Experiencing a period of lack of discipline. Now, there can be other reasons, of course. These are just some of the common ones for trading poorly. So, when should we also lower our position size? Returning from vacation, returning to trading after a layoff for whatever reason. It could be illness, a self-imposed timeout, or whatever the case may be, but we've had a layoff from trading. And of course, when any other issues deem a timeout necessary. And I've put a little comment here that life happens. There could be things that go on within your family, things that are out of your control. So these could be other reasons that we should lower our position size. G'day, Siddharth. So how will lowering the trade size help? Now, what it does is it allows us to regain confidence in our strategy while having a reduced level of psychological effect. So we've probably all experienced a time where we've perhaps had 5 or 6 consecutive losers, and it starts to create doubt in our minds as to our strategy. Creates doubt as to whether we can, whether we can do this. It may be, and if we're not objective, because we're still trading with the same trade size, we're now starting to introduce a lot of the psychological effect, such as doubt, as I said before, fear, of course, which leads to making decisions that we shouldn't, such as revenge trading, which then, of course, just perpetuates the losing streak. So lowering the trade size, of course, helps us to regain our confidence, because what we're doing is lowering that psychological effect, or what I commonly refer to as the sting in the trade, which is the risk. So what it also allows us to do is regain belief in ourselves while having a reduced level of psychological effect. So when we drop the position size back to a third or a quarter, because we don't have that emotional or quite as much emotional attachment, it now helps us to start to get back in sync with the market, back into the swing of trading, and back into the swing of getting into sync with the market. Now, Mark Douglas talks about, the late Mark Douglas talks about in the zone, getting in the zone. Now, getting in the zone from his point of view means getting into the flow, getting into syncing in with the flow of market information, linking in with the group psychology of the market. Now that can be on a shorter term time frame, which is generally where it's needed the most, but it does relate to any time frame as well. So it lets us rejoin the collective, so to speak. So those of you, g'day DJ, those of you that are Star Trek fans will know about the collective, the Borg collective. So it helps us to get back in sync with the collective, because we don't have that dollar value affecting us. So what it also allows us to do is remain objective to the market conditions and the possible outcomes. When we're trading poorly, we are likely to perhaps jump at suboptimal trades. We're likely to only see what we want to see. We're likely to build a case for what we want to see, which obviously then leads to poor trading, over trading, and everything else associated with a fear-based decision process. So it allows us to regain a level of psychological control. So if we've come back from a layoff for whatever reason, as we said before, we've dropped the trade size, and now we hit another losing trade, the psychological damage is not as much because we haven't got that monetary impact. Now, so, and this is what I was trying to segue into as well, it allows us to return our focus to the process of good trading. So in other words, it allows us to return our focus to the process and not the money. So when can the trade size be increased? When we feel that we are back in sync with market flow. So once we feel we've got a bit of a grip on the market, reduced our size, we feel like we're reading the market a bit better. So our confidence is obviously built back up. Now we can start to increase it when our results are back in line with our statistics. So if you're trading from a series of trades perspective, you will know if you've just hit 15 or 20 trades with reduced size, if you're now back to a reasonable average win, average loss, win rate percentage, you know that now I can start to gradually ramp the size back up. But what we've got to do is pull ourselves back and then ease back into it. It's got to be gradual. So when we feel we have regained belief in ourselves and our methodology. So how many people have been there where we've taken 6 or 7 losing trades in a row, and all of a sudden we're doubting our methodology, we're doubting ourselves? These are just common results. So when our focus has returned to the process of good trading, so we're no longer focused on the money. So you see, if we've just taken a string of losers, what's the very first thing we are going to think of? It's going to be the monetary value. So what we have to think of is I haven't performed too well. My process has been out of sync and out of whack, and that's led probably to a 6 or 8 consecutive losers where it may have only been 4 or 5. So when our focus has come back to the process of good trading, our focus has returned. In other words, we've taken loser, winner, good losers. Yeah, this will be recorded, Surav. When we feel we have returned to an acceptable level of emotional control. So, as I've said just before, winner, loser. Now we feel that no, there's just no effect. We've got to get to the stage where win or lose, there's no attachment. There's no there's no emotion, where everything is level. We can't have these ups and downs, win, lose. Everything's just got to be level. I actually had a look at some of my trades, and maximum I take is about 6 or 7 losers in a row, and that's according to my win rate and my statistics. And I just realised also that I had actually experienced that from my review, experienced that probably 2 weeks ago, 3 weeks ago, and I didn't even realise it. So, because I'm just focusing on the process. So, okay, so we'll just finish that one for the moment. So, the first tip is lowering the trade size when trading poorly. And I hope now you can see the benefits of doing this, but also the benefits of thinking from a series of trades perspective and focusing on the process of good trading. So, as I said before, win or lose, what's more important is the decision making that led us to that choice, or led us to that decision. So that's tip number 1, lower the trade size when trading poorly. What this also does too, let me just grab the pen. Okay. When we go down through a bit of a drawdown period, now this may be normal drawdown according to our system and our set of rules and our statistics. When we're trading now, whatever the reason is in here, if we've been trading poorly and we don't reduce the position size, what ends up happening is now we're in that revenge type situation. We're trying to make back because our focus has gone off the process. So what quite often ends up happening is either a sideways period where we finally pull ourselves out, or worst case, we turn this common drawback into a worse situation. So it's important to recognise when we are in these situations what's causing this, and if it's trading poorly, the very first thing we do. And then we analyse why. Okay, let's move on. So tip number 1, lower the trade size when trading poorly. So tip number 2, earn the right to trade bigger. So when have we earned the right to trade? When have we earned the right to trade bigger? When we are demonstrating consistent adherence to our methodology over a large sample size, regardless of account size. So key words here, demonstrating, consistent adherence to our methodology, large sample size. Not just 4 or 5 trades, large sample size. So what do you call a large sample size? 20 to 30 trades minimum. if you're a short-term trader, that 20 to 30 trades could be a couple of days. So you need to spread it out over, say, a week to a week and a half. So you've got a large sample size in terms of time as well. So when have we earned the right to trade bigger? When our statistics demonstrate a level of emotional control over the large sample size. So in other words, from our back-tested results, our previous results, we know our statistics, and we're achieving this. So we're achieving our statistics. We've demonstrated our level of emotional control. We may have reduced the size slightly, trade size slightly, when we perhaps had some bit of a drawdown period, but we've analysed that and we realise that it's the market. We've recognised that early, so it hasn't been a huge dent to our trading account. So when our statistics demonstrate a level of emotional control, an acceptable level of emotional control over a large sample size. So when have we earned the right to trade bigger? So here's the key. When our focus has shifted to the process and win or lose has little effect. So the series of trades perspective. Now, obviously this is not enough. Our focus has shifted to the process, but our statistics still need to be in line. So all of these items still need to be in line. So in applying bigger trade size or earning the right to trade bigger, what we then do is we apply incremental increases and we monitor our performance statistics. So applying the incremental increases helps us to get used to the new trade size. And this doesn't mean if you're trading with one lot, this doesn't mean you jump to 3 lots. It means you go to 1.2. And you might do that for 3 weeks, 4 weeks. Then the next step might be 1.4. Same thing. Then the next step might be 1.6. Must do it incrementally. Now, I know in past workshops we've spoken about this as well. So apply incremental increases and monitor our performance statistics. So we want to know when we're at 1.6 lots, we want to know that we're adhering to our methodology over the large sample size. Back here. So when we're here, if we're demonstrating consistent adherence to our methodology, our statistics demonstrate that we have an acceptable level of control, then we can keep going. You may find that you get to this, it may be too soon. Drop back to here. Okay. Tip number 3, be yourself. Don't try to be anyone else in trading. So, folks, we're all unique and individual. We're all created unique and individual, and so will our trading be. So what does that actually mean? Or what should we do? So be yourself. Don't try to be anyone else. So what this means is that we need to apply what resonates with you, not what someone else is trading, but be open-minded to what others are trading, because you may just find some nuggets in there or some tips that can help you in your own trading. but you need to apply what resonates with you. This is absolutely critical. So apply what resonates with you. You may be, like myself, mathematics, engineering mind. So what's going to resonate with me is analysis, having a well thought out plan, being able to analyse and get be satisfied that I've analysed the chart enough to give me the probabilities, to know where the probabilities lie, and then be able to apply my edge to those probabilities. Or you may be someone that is relatively quick at making decisions, relatively quick at picking up visual cues. So you might find that shorter time trading suits you. You can just pick up when momentum is beginning. So you might find that that's better. That suits you better. So, but you need to also be open-minded. What works for one person may not work for somebody else. Just because it doesn't work for you, that's no slur on you, or that's no you don't need to feel that you're missing something, because that's just who we are. But there'll be something that you pick up that somebody else doesn't pick up. So be yourself. Don't try to be anyone else. And also trade with a size you are comfortable with at the present moment. Not what somebody else trades with, not what anyone else trades with. So if you're comfortable trading with 0.01 or 0.02, that's where you're at, and you're being consistent, don't feel you need to compete with anybody else. If you trade with friends or family or mates, don't worry about what they're trading with. You trade with what you're comfortable with. Because as we said before, consistency and focusing on the process is more important than size. So trade with the size you're comfortable with at the present moment, not what anyone else trades with. And leave your ego at the door. So this is probably not quite as appropriate to us, but sometimes in trading situations where 5 or 6 people trade in a room together, there's always going to be ego. So it's important to leave your ego at the door and just be yourself. So here's one of my favourites, Martin Schwartz, or Marty Schwartz. And what Marty says here, he says, I've said it before and I'm going to say it again because it cannot be overemphasised. The most important change in my trading career occurred when I learned to divorce my ego from the trade. Martin Schwartz. So let's read that again. I've said it before and I'm going to say it again because it cannot be overemphasised. The most important change in my trading career occurred when I learned to divorce my ego from the trade. There's another one by Martin. I couldn't find it. I'm pretty sure he said it. But it goes along the lines of, the day I stopped worrying about what everybody else thought was the day that I started making real money. So there we go. All right, folks. So thank you for your company and for watching. Do we have any questions in regards to any of this content on today's workshop? Now, a couple of pretty sort of big topics, I know that. So I didn't want to dig too deep, but I thought they were good. I thought they were good topics to just expand on, because these are a lot of the topics that a lot of traders trip up on early. So thank you, VJ. When we talk about back-tested results, actual results, thanks, interim. When we talk about back-tested results and actual results, these periods that our back test shows us as drawdown end up more like this. And these are the times when we've got to be trading smaller size until we get into in sync. So as long as we end up here with roughly the same, so just remember that this might be 5 losing streak. In reality, it will be like about 7. It's our job as traders, responsible traders, to find out what caused the extra 2. Now, this week, and when the markets are range bound and stally, like they have been, the theme that we've used is drop the time frame down slightly. In other words, if you're a daily and 4-hour trader, drop your time frame down to 4-hour and 1 hour. Don't go down to 5-minute chart, and just be satisfied to take 15 to 25 tick profits. Because we're allowing for the market as well, whereas we can't just keep hitting it the same. And drop your position size down. If you've been trading the same this week that you normally trade, you may even find that your results have probably suffered a little bit. If they haven't, then more power to you. Okay, VJ said trading in low lot size in the fail period. How do we need to stop and take a break after continuous losing trades? The very first thing we need to do, VJ, is have a look at our decision-making process with those particular trades. Now, if we find that during that period that it's not a method mistake, it's not a state management state or a psychology related mistake, then the chances are there's 2 things. Either the market is not suitable and we haven't picked it up early enough and it's whipping us out of our positions, or the second one is we're just on the wrong side of probabilities. If we've made all the right decisions, we've followed our plan, then that's just let go. But when you are in a losing streak, you may just want to drop your size down a little bit anyway, just because unless you're very highly tuned in terms of thinking about what you're thinking and able to interrupt very quickly, you may find that you're doing things that you don't even realise. So a lot of that comes... Okay, we just had a bit of the stream just spiked a little bit then. I hope I'm still coming through. Just do another quick sound check. Test 1, 2. Okay, we just had a bit of a stream just spiked a little bit then. I hope I'm still coming through. Okay, it sounds like I am. Apologies there, folks. So You know, you've got to be able to pull apart the reasons why, and this all comes back to doing your reviews. In other words, trade review. Okay, apologies, folks. I just had to kill one of the programs. Does it to us in the mornings at the odd time as well. Apologies there, folks. Okay, we should. Oh, there we go. The mouse is cleaned up a bit too, so we should be back. Sorry about that. So, okay, I just want to hear just read some of the questions. Okay, so DJ has said, yeah, that's a great question. DJ has said, can't you use those periods to scale in when you feel you're in sync with the market? Yes, absolutely. That's a great question from DJ. Now, those of you that know my sort of style of trading as well, I will scale into a position, not necessarily to come back from a losing streak, but just to make sure that it's heading my way, and then I'll build the position. Don't always do it. Don't do it every time. I certainly do it with equities as well. So I scale in and scale out. So great question. So yes, absolutely, you can scale in to the trade. So if your normal lot size is one lot, you can scale in with a 0.4, 0.4 and a 0.2. So the whole point of it is to reduce the psychological impact of that losing streak. That's what it comes back to. So shrewd. So Shrewd says, how does the chat fit in with ego? If I have a different view from the trade idea, should I put forward my view? I don't comment unless I have a rapport with the trader, but I feel like I should warn them. But maybe that's just ego. Yeah, look, it's a bit of a tough one, Shrewd. I understand. There's a fine line between wanting to help someone and feeling like you're not necessarily interfering, or overstepping. So yeah, I mean, look, I suppose it comes into the delivery as well, Shrewd. Look, we don't get that. Thankfully, we don't have that issue here with Forex Signals and the chat. Everyone's pretty good. So yeah, Les. So look, I mean, but we're all here to help each other, I guess. We're all on a journey together. So I think maybe look, great idea. I'm sort of also looking at this from this point of view or something like that. Or better yet, Shrewd, put your own trade idea up. Okay, VJ, here's a good one. VJ has said, from the past week, I'm not getting any trade setups and my mind is diverting to scalping and lose one or two trades. So VJ is just, when you're not getting any trade setups, then the market is telling you something. Those of you that watch my streams will know that when I run the scans, if I don't get too many scan results, that means the market has gone into a bit more of a ranging or equilibrium period. And that's what it's in now. We had about 6 or 7 scan results when we usually get anywhere from 6 or 7 to 20. So that tells me. So, VJ, you want to try and look. There's nothing wrong with when I say drop down lower time frame. I don't mean drop down to a 5-minute and a 1-minute chart. If you're a daily and 4-hour entry, what I'm talking about is drop down to maybe a 4-hour and a 1-hour, and instead of going for 60 to 100 pips or 40 to 60, go for 20 to 40, because your stop will be lower anyway. But what you're doing is you're not getting subjected quite as much to the market move and then pulls back. We're seeing a lot of that now where there's no follow through. Breakouts they're not even setting up properly. Ones that do are just failing. So you got to try and gauge the market. So, but you're better off just stepping back and just go back and review your trades, or go and have a look at the trades that you would have placed days later and see how they worked out. Now, Farah, what is the average rate of return for those who are part of 1% winner in the market? I don't know about others than the average, but you should be able to make anywhere from 12 or 15% to 150 to 200 and even more, depending on how much leverage you use, your time frame that you trade as well. Now, when I say 150 to 200%, they're lower time frame traders that are really leveraging, and they're probably trading really hard for 1 or 2 sessions a day. Bluefin, is this part 2 in part 1 of the academy? It'll be in the workshops, Bluefin. Thanks, DJ. You're welcome. Big Les, I think too much subjectivity in trading is dangerous. Yeah, absolutely. You see, the rules that I've put together in the Trading Academy, all the lessons I've put together in regards to identifying trend when it's trending and when it's ranging, is applying objective rules. The only subjective part is when we determine price acceptance after price discovery. But the rest of it is black and white as we can get it. That's why I've spent quite a lot of time trying to put it together as concise and detailed as I can, because some people will pick up something, others will pick up other areas. So no, look, you're right, sharing different points of view, there's no harm in that. I think when I say ego, guys, I'm probably talking about, I wouldn't put that trade on. It's going to be a loser. I'd do this, or just being a little bit, or I traded this one, and just there's it's probably different to sort of commenting constructively. Yeah, good one, Chop D. When you post your signals, write down your explanation as to what you've seen. So how you've built your case, how you've applied weight of evidence. Go through like a running thought process of what you've found, what's supporting the case, what evidence have you. It's like weighing up it's like a court case. What evidence is there to support this theory, to support this trade? Because when you do that, you find as you go through the process of applying weight of evidence, you might find that you end up throwing a couple of the opportunities out. Some of you have heard me say that I look for reasons why the trade is not going to work. If I can't find any, then I look for the reasons that are in favour. And what that does is keeps me out of a lot of trades, keeps me out of that jumping at every opportunity, jumping at shadows mindset. VJ, I think VJ said about the summer period, the market is moving like this. I think this is, we're getting Trump, in the trade wars, we're getting, that no sooner backs off and then something else pops up. We're just getting this continual, we're being bombarded with events and things that basically put traders into a state of uncertainty. So the markets hate uncertainty, so they just it goes into a ranging type situation. Now we're seeing that with risk on, risk off, flipping off and on. With the yen pairs, we're not getting the trending environments. We're getting a lot of basing patterns. We're getting a lot of prices coming down to the anchor down here, and instead of pushing through or bouncing once and then going, we're getting these periods where it's just milling around here and then it goes. So we're getting these extended periods. We're seeing a lot of this. Euro, pound, Aussie. We're seeing a lot of them at key areas. We may have come down a support here. It's been sitting here for weeks. We're just getting wicks both sides. Indecision. You have to recognise this. You've heard me talk about price spends 20 to 30% of the amount of time trending. And these periods here, 70 to 80% of the time ranging. We've got to be watching and ready. So when these structures here start to move, we need to be getting ready to see which way they're going to go. We're seeing a lot of triangles, VJ. We're seeing a lot of expanded flats. These are correctives. We're seeing a lot of stalling price action. These are the times where the default setting should be less trades, smaller time frames, smaller targets, or sit on your hands, SOH. You need to have a default setting for these times because we're getting a few of them. Very good, Detlef. So Detlef has said, watch 3 different time frames at once, as I told in the academy. Really successful. Thanks, Mark. All right, very good. Thank you. Excuse me. Now, just a couple of questions. Just bear with me, folks. Unfortunately, I've had to shut the mouse off to one of my other computers, so I'm going to have to just manually do it. Any other questions, folks? Yeah, good question, interim. Yeah, that's right, Norbert. It's all part of trading. All right, very good, folks. All right, well, we'll wind it up there, everybody. I'd like to keep the workshops not too long. I know it's a bit to focus on, but go back and have a look at the replay. We kind of touched on a few topics there without going into too much detail, but I hope you can take a bit of that away and apply that to your own methodology. Right? Trading is all about methodology. So, apply some of those principles, and I hope they help you in your trading. I'm sure they will. So, okay, everybody, trade safe, remain disciplined, and I will see some of you tomorrow in the Asia session review. Thanks for your company, and we'll see you soon. Bye for now.